We're going to focus on home prices today. There's some important signals in the recent home price trends that you should be aware of. We can measure home prices in a bunch of different ways. Some ways focus on the market, what's available to buy. Some focus on the value of a given home. Some are fast acting, and some are slow to gather all the data they need to be accurate. But in general, all the methods will gradually move in the same direction over time. Today, I'm going to share 3 measures of home prices, and I'll show you how they're moving in the same direction and that it looks like we're on the way to annual home price declines nationally in the near future. I expect the headlines in the next few months to report home prices lower in 2025 than in 2024. That's already true in a bunch of local markets, and prices are softening basically everywhere now. So in a few months, it'll likely be the headline for the country as a whole. San Francisco, Dallas, Miami are already negative. New York, Boston, Chicago, Charlotte are still positive. As this shift becomes more well known, consumer behavior will likely change. Expectations will change. We should be prepared for that. We can see it coming now. So to illustrate what I'm talking about, I'll share 3 measures of home prices today. We'll start with the price per square foot as a simple normalized measure of what people are paying for homes. I shared this chart a couple of weeks ago and pointed out that it was about to turn negative. And as of this week, home prices measured by dollars per square foot are nationally below 2024. Also, last Tuesday, the latest Case-Shiller index was released. The Case-Shiller focuses on changes in the value of a given home. It's several months behind the active market. So last week, the Case-Shiller reported June data. And by this measure, home prices were still 1.9% above 2024 back in June. This growth is compressing each month. So by the time the Case-Shiller reports home prices for the end of summer, it'll confirm what we are seeing in the real-time data now, home prices below 2024. I'll also share the weekly pending sales prices. So this is a measure of what people are paying for homes now. It's also still a little bit positive, a little bit above last year at this time, but it's also trending lower. And I'll show you why I expect that number to be consistently reporting home price declines by the end of September. So we'll look at then home sales, which are just slightly above last year. So that's looking at transaction counts in the weekly pending home sales data. And finally, we'll look at inventory, which is not growing anymore. We can see negative price pressures, but supply is fairly restricted. So not a lot of sellers each week. And restricted supply should keep a floor on prices in the future. So restricted supply acts as a counterbalance to declining prices. I'm Mike Simonsen. I'm the Chief Economist for Compass. In these videos, I look at the U.S. housing market data every week. The goal is to help everyone understand what's actually happening in the market right now so they can make the best decisions when buying or selling a home. In these videos, I use data from Altos Research as well as insights from what we see at Compass, the largest real estate brokerage in the country by sales volume. So let's dive into the data here for the end of August, beginning of September. Let's start with prices. Specifically, when we look at the asking price per square foot, home prices are now below where they were last year at this time, at $217 per foot. That's just 0.1% below last year, just a tiny fraction below 2024. This chart is of the price per square foot over the last 4 years. The blue line is this year. Notice that the slope is down much more steeply than in other recent years. So the blue line came in just below the purple line for 2024. But the trend is pretty clear. Pricing has a normal seasonal shape. The best listings with the strongest pricing happen in April, May, June. Pricing then declines for the second half of the year. And it's pretty clear. Sellers who want to sell now are pricing at a slight discount in order to be successful in this market. That's the important takeaway on home price trends. You want to be ahead of this curve, not behind it. The price per square foot data looks at the active market It's normalized across properties, so it's effective and it's real time. The Case-Shiller index is the most rigorous way to evaluate changes in the value of homes, but it takes a long time to gather all the data. When we map out the Case-Shiller in annual bands, you can see it looks a lot like the per square foot data that I just shared. At the end of 2022, had a steep drop off. That's the yellow line. The 2023 had a moment below 22, but it also shows that in the last 2 years, even though sales volumes have been low, prices have been up nationally. Since the Case-Shiller is only reported through June, it's still reporting positive changes over 2024. The per square foot data back in June was still positive too. So this tells us that the Case-Shiller will continue to compress compared to last year and likely turn negative in the next few months. So currently at the national level, the CSI is 1.9% greater than in 2024. Home price is 1.9% up. That growth is compressing every month. It's probably the September CSI, which will be announced at the end of November, that'll report negative, likely. We'll likely finish 2025 with negative home prices by this measure. And that'd be the first time that's happened since the end of 2011, the tail end of the great financial crisis. Consumers are going to hear these headlines. Incidentally, I was doing this data back in 2011 at Altos, and the real-time data turned positive in March of 2011, way before any of the headlines. So if you were tuned in at that time, you were really ahead of the game. So there were a lot of real estate investment fortunes made starting in 2011 because only some people watched the real-time data. So even though the headlines are turning south now, it becomes more important, even more important to watch the data each week. My favorite time to be in this business is when I get to be contrarian and bullish, so stay tuned for that. The third measure of home prices this week is to watch the weekly pending sales. We track every home going into contract each week, and we see where they're priced. So I've graphed a 4-week rolling average here, the weekly pending prices, so it smooths out some of the weekly noise. But the median price of single-family homes in the U.S. now is $396,000. That's 1.6% greater than 2024 still. That's the blue line in this chart. You can see it's a little above the purple line. The median price of all the homes on the active market is $449,000, which is unchanged from a year ago, not negative, but flat. The median price of the newly listed properties is $400,000, which is also unchanged from a year ago. But let me call your attention in this chart to 3 pricing moments of the post-pandemic era. In June of 22, mortgage rates had spiked 250 basis points and demand stopped. You can see the price adjustment that happened in June of 22 in the yellow line. Then later in September and October of 22, rates spiked again to 7.5% and prices adjusted down again. That's also in the yellow line. That led to 2023 negative prices that we saw in the previous 2 charts. The price drops actually happened in 2022. But last year, in September, the market graced us with a moment of mortgage rate dip to 6%. And you can see in the purple line how prices stayed elevated as a result for the rest of the year. So September 24. So this tells us a few things for the rest of 2025. First is that if rates stay in the upper 6s, prices look likely to dip below last year. That's what we've been talking about today. If rates jump from here, and that can happen, for example, if the inflation numbers continue to come in too high, there's still a lot of evidence that the tariffs and big government spending are pushing inflation higher, so rates could jump again. If that happens, look for down steps in home prices like we saw in 2022 in the yellow line. So we're all sitting here with our fingers crossed that rates decline, but it's not at all a stretch that mortgage rates rise the rest of the year. So we can see what will likely happen to home prices if that happens. On the other hand, if we get lucky and rates drop, the threshold I'm looking for is close to 6%. 6.5 doesn't seem to really be enough to move the needle. But last year, that stretch in the low sixes did indeed move the needle. So keep your eyes open for that. So let's now look at the supply side of the equation. There are 861,000 single-family homes unsold on the market. That's a slight downtick for the week and is essentially unchanged for 6 weeks in a row. Inventory has plateaued here for the summer. There are 22% more homes unsold on the market now than a year ago. In 2024, inventory was rising quickly. That's why we see the price pressures now from inventory builds a year ago. Next week's data will include the Labor Day holiday, so there will probably be another dip in inventory next week. Later in September, I'd expect a few weeks where inventory builds again with the tail end of the season. I expect unsold inventory to end the year in the same range as 2017, 18, 19, about 820,000 homes on the market. The blue line here is this year. The orange line is 2018. The gray lines are the years before the pandemic. You can imagine the arc that we're forecasting for the rest of 2025. The takeaway for the supply side of the housing equation is that supply is not really growing anymore. There's no sign of distressed home sellers. There's very little sign of investors selling on any scale. Even as home prices dip, for nearly all Americans, it's still a great deal to hold onto their house and not sell. Some fractional amounts of equity will evaporate, but Americans collectively have huge levels of equity. So these marginal changes in home prices will impact people who bought in 22 or 23, but not the country as a whole. So if you're a buyer waiting on the sidelines for a home price crash, you should know that while prices may get a little cheaper, the selection for homes for sale is not growing. So this may be different than what you're expecting, and so it's important, something to take into consideration. So today's report has focused on prices. If you've been paying attention at all, you'll know that for several months I've been pointing out that home prices look like they're starting to inch lower, but that sales look like they're starting to pick up just a bit. In fact, this week we counted 66,000 single-family homes that sales started, new pendings, plus another 13,000 condos. That was 4% more pending home sales than the same week a year ago. 4% sales growth. We just ticked another week of slight home sales gains. So even though prices are easing down, sales are picking up. The headlines are just catching up to this data too. So I expect to see home sales growth headlines in the coming months, even as prices tick lower. In fact, in the Altos weekly pending sales data, pending home sales for the year have inched higher than last year's total, year to date, by just a tiny amount. So through August, we have counted 2.759 million sales compared to 2.758 million a year ago. So although, after fewer home sales all year long, the cumulative weekly data has just turned positive. At the end of last year, I forecasted that home sales would grow maybe 5% in 2025 over 24, but sales have trailed that forecast all year long. So I was certainly off in that projection. The macro dynamics I was looking for at that time included a few moments of cheaper mortgage rates, some confluence of economic news that led mortgage rates to dip close to 6%. That confluence has not happened at all this year, and as a result, sales have stayed very soft. Now, there's nothing in the data that says home sales are going to shoot higher, and if we get unlucky with mortgage rates, this tiny growth could very quickly reverse. Okay, that's all the data we have time for today. I hope you're now dialed into what's happening with home prices right now. We're in for a few months of negative home price headlines. That has implications for both buyers and sellers. Supply, though, isn't growing anymore. And if we get lucky with mortgage rates, we'll finish 2025 with slightly more home sales than in 2024. All right, more next week.